Greetings, everybody. This is Jeff Scott. This is my weekend review for November 8th. A couple housekeeping things real quick. I'm using a different computer today. I'm trying out a different resolution. I actually read a review about a Ryzen 9 processor, and I decided to buy a notebook just to tinker with it. And they're cheap notebooks, not high res, although this one's 2600 by 1440 or something like that. I'm actually very impressed by the processor. They seem to handle TradeStation Thinkorswim better than an Intel i9 10th generation processor. So we shall see. Other things, if you're watching this on YouTube, please hit the subscribe button. I don't send out notifications to a mailing list. It's your best way of finding out if there's a new video. And if you like this, hit the thumbs up. And I'm always happy to entertain comments through the remarks section or underneath the remarks section. Please don't solicit me for money, which someone tried doing this past weekend. I may be successful in the market, and I am very charitable, but we have a pre-planned charity designation to begin with. So I entitled today Breakout Mania, November 8th, 2020, and here's my email address, hgsidoc@gmail.com. I don't normally put a chart on my title, but this is the IBD Breakout Opportunities ETF. And it usually behaves a little different than the IBD 50 ETF. And when I say breakout mania, this is a $24, less than 24 to 27.5. So that's a 15% move in about 5 trading days. And this is what, as I went through my chart review this weekend, so many stocks look like this. I bought a lot of them on Monday or Tuesday, or several of them. Hard to be chasing these. And so I won't put a stock that looks like this on my buy watch list because it's too high risk. It may go a lot higher, but I don't want to lose your money. As always, this is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. No one pays me to say good or bad things about the tools that I use, and I get paid for all those tools. And trading involves risk, and you alone are solely responsible for any decisions you make. I'm going to talk about how I got my returns, from a high-level perspective, but it starts with being your own guru. I'm a doctor. I don't practice anymore, but I do have the degree and all the licenses and board certifications, and I didn't get them by reading it in a book. I went to courses. I got educated. I did do a lot of reading. I found smart people, sort of like a residency and a fellowship as a mentorship program. And I came out of it a trader, or at least my vision of a trader, which is different than other people's vision of a trader. You're not going to get there on a shortcut. You need to be educated. FOMO doesn't work forever. It works in bull markets, but when this market turns, you need to have a fundamental basis of your education, and I can't stress that enough to anybody. What I need on my desert isle besides high-speed internet is I need TradeStation Thinkorswim. I use a number of indicator sets. I use John Person sets, Dr. K sets, Q sets. I use HGSI for analyzing charts, especially end-of-day charts. EdgeRater automates a number of the things that I do on a daily basis, and as I mentioned, the Q and Dr. K tools. I have brought others on to talk on my videos, and I want you to know that I keep this up here because I'm very serious about it. I am never paid by any vendor when you buy something that I suggest or use. Any affiliate fee offered to me is passed to the purchaser as a discount. I am an unpaid volunteer. This is just education. Often you'll go to an event and they'll introduce you to their friends, other traders, who will then present and sell you something. Typically, there's a commission or an affiliate fee to the introducing person. There's nothing wrong with that. That's the way the world works, just not how I work. HighGrowthStock.com is a website that I have no financial relationship with, but it's the site for HGSI. Under free 30-day trial, it's, as I said, it's free and it's 30-day. Under investing strategies, you'll see lots of movies. Just again to mention, this is a different resolution. It is not 4K. And I'll be curious if you could comment in it. For those with a 4K monitor, just say, hey, I have a 4K monitor and this is good or it sucks. Or, hey, I don't have a 4K monitor and this is actually better. Please keep using this. I'm just curious how this resolution works. Stock patterns are cyclical. Well, a week or two ago, I thought we were up here and rolling over, and we did. We had a couple bad weeks. This week, it felt like we've now gone into a new buy mode. It doesn't flip-flop that fast. And in my experience, when it seems like we're flipping from buy to sell to buy to sell to buy to sell, is we're sitting up at the top, and that, it's not ready to roll over, so it takes another leg up. And then if it seems like it's rolling over, it takes another leg up. Ultimately that breaks one way or the other. And that's what it's feeling like right now. Can this go higher? Absolutely. Can it turn down from here? Absolutely. You have to be aware of both a bullish and bearish scenario and plan accordingly. So I was heavy in this box here with puts and bear call spreads, et cetera, and I lightened them up. I kept puts on Amazon, and there's a reason for that. And I guess maybe I should tell you why in a second. And I bought not a lot, but I bought several stocks and took some long positions. Why am I going back and forth? Because I think we're in this uncertainty, and I don't want to miss if I'm wrong and we're starting a new leg up. Why do I protect my Amazon so much? I will mention later that I do portfolio margin. If I have puts on Amazon at $3,000 today, that gives me an immense amount of portfolio margin because that Amazon is protected at $3,000. If I have puts at $4,000, which would be insane because they're too expensive and too out of the money, then I'd have $4,000 worth of portfolio margin times a multiplier. I keep my Amazon protected because I use it as a source of funds, that margin, for most of my trading. And I use my trading as the bank that's paying for the house I'm building in Santa Fe. So I have to protect the money that I'm using to build that house. Hence, I protect my Amazon with puts. It probably cost me $200,000 over the last 2 weeks for that protection, as I was happy when Amazon dropped, but it went against me when it went up. When you look at my returns and where I'm at, that's nominal. And it allows me to stay in the market, and it protects and allows me to sleep. But that put on Amazon is probably not something that I would be doing in normal times. Sector review, mixed green is how I would say that. Yes, sorry about that. Consumer staples, almost all green. Technology, green. Discretionary, 50-50. Utilities, no. Healthcare, mixed. Communications, mixed. Real estate, ugly. Financials, ugly. Energy, well, ugly unless you like the color red. So a very mixed sector review. Let's take a look at the major market indices in the charts. Again, with a different resolution, the charts are going to look more crammed together, but not in this view. So here is the S&P futures. I like futures for this analysis, although I could do it on the cash markets as well. This is 1 year worth of data. The white bubble down here is the low of the year. The white bubble up here is the high of the year. Note that on the Russell 2000, unlike the other indexes, the high of the year is not the all-time high. You can see on Friday on the S&P, we actually opened up kind of where we closed. That's a doji. I don't know if that's a dragonfly. I don't get that fancy. Long tail. We traded down, and it looked like it was going to be a tough day. And then the S&P actually closed up nominally 0.15%. Now, as I look at this, we are a little bit 35.87 the high and 35.10 is where we close. So we're 77 points away from all-time highs. That might be a target. Also, you'd expect some resistance there. Where the 17 in green is above the 50 in yellow on the moving averages, which are above the 200. That's great. Volume was high as we made the move up earlier in the week, and as our advances slowed down, the volume dropped. That's good. We're well off our lows. To me, I look at this, and it's a bullish-looking chart, and we'll get more to what I think later. If I look at the NASDAQ futures, I've got nothing else to say. It looks absolutely the same. If I look at the Dow futures, Kind of looks similar too, doesn't it? Except it's red, so the Dow was down 16 points on Friday. Now I'm just curious. Yeah, it's Friday is the 6th, so yep. So Dow was down a bit, at least the Dow futures. Remember, these are the future market. Way off the 200-day moving average here. Here, the 17 is still below the 50, so that's a little bit less impressive. And you could start to almost draw a trend line here where we're coming up near a short-term resistance. And the all-time highs were back in February, not recent as they were on the other two indexes. The Russell has had a very strong move off the bottom as well. I like the moving averages. The Russell's taken out its recent highs. Here's its annual highs up here, which is at 1715, is about $67 away from here. Again, this is not their all-time highs. The VIX has come down a lot. It's now below its moving averages. That is supportive for a higher market. And then the dollar looks like the VIX. It's come down a lot. So if you have metals, you may have noticed some movement there. Plus a weak dollar, historically for me, has always been good for the market. And I hope that this is recording. Let's see. All right, let me check this out of that mode. And yeah, it's recording. Go back into this mode. The weekly charts on the futures, notice a weekly buy on the S&P, a weekly buy came in on the NASDAQ. That's actually bullish as well. Now, I like to look underneath. I look at the same things every week. I look at the 10 and 30-year interest rates, and they both tucked down a little bit this week, but they're in uptrends. I think the Fed's in between a rock and a hard place. When you see some kind of economic improvement, you would think the rates would go higher, and I think that's why the rates have come off the bottom. But we're still leaving part of the economy behind, so I don't see the Feds tightening anytime soon. They've certainly telegraphed that that's the case. And plus, how can the government pay back its debt if the interest rates are high? So I think rates stay low for a while and continue to be low. And this is just a small change. It doesn't mean much to me. AD lines in both small stocks and the big stocks moved higher. The big stocks look like they're at all-time highs on AD line. You can see the NYSE is off its all-time high in white, but here's a list of these major ETFs, and you can see they all turned up, including the TLT, with the rates dripping down. If I look at stocks above the 200-day moving average and stocks above the 40-day moving average on the right, both back up in the higher part of the middle of the range and made up what they lost over the last couple of weeks. The 3-month new high, new low went 2 weeks ago from an area at risk of falling over, and it did. Last week we talked it was near reversal area, and it's now back sort of in the middle, higher part of middle. The daily and week McClellan, the only change that I'll see here is, because we're not setting new highs yet, so I don't see divergences, is the oscillator on both the daily and the weekly have crossed above the midline, which is probably bullish. We look at our buckets. We've come off the oversold area. 58% of stocks are above the midline, the S&P 1500, which is modestly bullish, and 10% are above their Bollinger Bands, which is not a signal. There was no evidence of a Hindenburg omen. For those that are new to me, a Hindenburg omen is sort of like folklore. You believe it or you don't believe it. It's a combination of new highs, new lows, moving average of the NYSE and the McClellan oscillator. And there's not been a major market meltdown that wasn't triggered by a Hindenburg omen. The problem is many of these are false. You won't see a HINDY until you have lots of new highs and are getting near old highs, and we're not there today, so we don't see any. Market tone, I look here at the Woody indicator, flip-flopped from bullish to bearish, back to bullish with a strong week. In fact, when I show you the sectors here, you can see that they flipped as well. Let's define a strong week. On the right is a tool from HGSI called the Group Performance Analysis. I ran this Friday evening, and I asked, based upon the fundamentals and the lists that I had chosen on Friday, 10/30th, had those list stayed static, what was the performance of each list? First thing you'll notice is there's nothing red. All my lists were up on the week. They were up a lot. If we look at the S&P 500, it was up over 7%. If I look at the IBD 50, it was up 9.86% or 9.86%. Now, if you didn't make money this week, you probably weren't in the market or you weren't long, because this was a great week to make money in the stock market. My stocks that I own, if I just own one share of each stock or $500 of each stock, was up 10.5%. My actual performance was better than that, but it was, I had options which accelerated it. But then I had to reduce it a little bit because I had some protection, but I still had a week above 10%. So I'm a very happy camper when that happens. My buy watch list, looking at stocks based upon the patterns last week, was only up 5.5%. Not a bad week. It was a strong week. Now over here tells me that growth was working. Now why? First thing I want to point out is that there's nothing negative in any growth level for last week. Everything was positive. I also eliminate the 3 dots to the left and the 3 dots to the right just because the number of stocks in that level is so small. What you see is a lower left to upper right movement, and when you're higher on the right than on the left, it means you're favoring high ERG stocks. ERG is the combination of EPS rank, relative strength rank, and group rank. So when you have this pattern, it favors growth. And as we already pointed out, it was a very strong week. Earnings per share rank was favored. Higher bars here, higher return, higher EPS rank. Relative strength was favored. Group rank sort of favored, less important. The interesting thing was stocks that were out of favor on Friday a week ago were in favor this week. But think about big cap tech. It went from the lousy week the prior week to a very strong week this week, so maybe not a surprise. So bulls definitely in charge. Now, I talk a lot about the Q tools, and I hate showing this, and I love showing what I'm going to show you. So I'm sort of split. Why would I hate it? Well, it's a tease. You all can buy this. That's not a tease. It's very affordable, monthly fee. But the problem is it requires Refinitiv or Metastock data, and that's not inexpensive. You cannot run this with HGSI. I also am mixed showing you this because some people might say I'm showing a competitive entity to HGSI. I wholeheartedly disagree with that. I think it's complementary. This is my favorite screen. This screen will sit on my computer all day on one of my monitors. What is it showing me? It's showing me, and you'll notice one day here is one day here. It's the same. When the market opens on Monday, this will not change much, but this will become the current day. If I look back at a month, going back a month, this tells me the markets have been strong. I've had 82% of the sectors have been up over the last month, 74% of the industries, and 62% of the stocks. All right, that's impressive. If I go to the last week, it's even better. Now, interestingly, the last 2 days, the market started to weaken some. So much of the strength were early on in the week. And so we did limp into Friday. I can't go up every day. In fact, on Friday, only 2 of the sectors, staples and communications, were up. Now, if I look at over the last 2 days in green, you could see they pulled up most of the sectors over 2 days. And if I look at 5 days in red, everything is up. Over 10 days, not so much, and over a month, a very strong period of time. How important is it, do you think, if I'm sitting there during the day and I'm looking at the indexes going higher and I'm seeing the red part of the pie getting bigger? It tells me that there is some breadth issues underneath the market, and it might give me a clue that I want to back down some on my bullishness. Now, here I'm going to open up, I hope, let's see, come on, the sectors. I opened up the right one, so I enlarged it. And this is the various S&P sectors. This is being calculated off the S&P 1500, not the 500. Now, I'll have to ask Sager, I didn't see the video about Sector 2 and Industry 2, but this is calculated off the S&P 1500. If I do this, I could see that the best movement was communications, staples, IT. IT's been strong for a long time. Materials has been strong. Energy, real estate, financials, and utilities have been in the toilet for a long time. Now, maybe one day is too fast for me. So I might want to look at over the last week what was leading. And I can see over the last week that discretionary, although they weakened in real estate, actually had improved a lot over the last 5 days. And communication has been very strong. So putting all that together on a short-term and a long-term basis and recognizing the strength of the market, I am interested in, say, communication services and information technology. I'm going to skip staples right now. Well, we'll include staples as well. So I've got them highlighted. I'll give them some love there. And now what I can do is I can hit these gears. And this is going to bring up the industry groups in those sectors and a similar ranking vehicle. Let me enlarge this so you can get a better shot at seeing it. Well, so now I can see within those groups, these are the tops. So let's say I'm interested in anything that's in above 130. I'm going to give it love, and I'm going to hit the peer analysis. Now it's going to go into the S&P 1500, and it's going to give me a list of all the stocks that are in those industry groups. Now I can rank them by one-day performance if I want to, which is going to show me, for example, Glue Mobile was up 27.3%. Coty was up 22.16%. I've got a bunch of fundamentals. Now, most of this ranking is fundamentally driven, and those that know me know I'm more of a technician. But now, Sager set these little stars up here that this is going to give me undervalued stocks with good earnings growth. And here are some stocks that it comes up with within those groups. And this was some of the top stocks. Now, I might want to look at these stocks. Now, I know that these are the symbols for Thompson. If I'm a TradeStation guy, I could come right here, copy them, go into my TradeStation, and I could paste the list. I'm just going to paste it, and we may come look at it if I remember before we're all done. Actually, I'm going to look at it very quickly and then go work one of them up further. So this is Smart Global Holdings, probably gone too far, very bullish. Again, this is breaking out ENR. I may look at that. Micron, notice how these are all stocks. These stocks are breaking out. This here is strong resistance, which is the problem with all these stocks is they are approaching resistance. I'm looking for one that is not approaching resistance. So I'm going to pick, for the rest of my analysis, let's pick Energizer. Let me just tell you what I see on this curve. Green is good, red is bad. Sager can teach you his indicators, but this is a I don't know if that's a stretch, but this is a bullish sign. So the stock is done coming down. I have a similar one down here at support. This is where I should have taken the trade if I was going to take the trade. Blue is a bullish backdrop color. Green is good. I like that combination. I do not like the fact that it's up at resistance and I've got resistance here. But that said, that's still 7% away. This is a stock that's clearly been in a downtrend that's making a move. So let's go back to, and I know this is confusing if you've not used Q stuff, just copy that symbol and I can stick it in Vital. I just think this tool is amazing. And let me paste it in there. And let me turn this on. So Energizer Holdings, household products, consumer staples. Here's its price. Not a lot of volume, so that would be challenging for me. Here are its peers. Okay, it's similar stocks expanded. I can see 65% of them were up on Friday. It's got 35% the last quarter earnings, 85 or this quarter 85% last. It's certainly a turnaround stock. It's gone from negative growth to positive growth. Good. It's got revenue growth. So let's take a look at it here. And now when I do the pure analysis, it's going to find stocks that look like it, but stocks that are in beyond the S&P 1500. And let's do this little tool here again and see if I come up. And it identifies 4 stocks that are similar to that stock. And then I might want to pull these out, bring them over, and then quickly look at them in TradeStation. Yes, this is a departure from what I typically do on these calls, but I just wanted to show you how I use those tools during the day. This thing is obviously gone. You know, the problem after last week is so many of the stocks have broken out, hence the title Breakout Mania. So finding stocks that are still at good buy points is not going to be something that's going to be easy today. You know, this is at a better buy point, but I don't like the topping tail. So not a great buy point. It's run too much. But if I had to pick one, I would pick Energizer Holdings. But let's go back to HGSI and the standard approach. So I find the Q tools especially to be, this is my favorite tool to be sitting on my desktop, to be very useful during the market. Canaries in the coal mine. I look at the extended FANG. I know Priceline's called booking now. Yes, it's in the chart that way. And, you know, they're poised for a breakout. If they can break above that chandelier stop, then these things could go off and threaten all-time highs. If that happens, it'll take the market with it, in my opinion. This green bar here is a Eureka. A Eureka is a follow-through day on HGSI. Similar to, but different calculations than the IBD follow-through day. Typically, Eurekas signal a change in the market to the upside. Eurekas occurring after a major run-up could signal a rational exuberance. We've not been in a major run-up for a couple months, so I'm going to look at that as a positive. Know your news and earnings. Well, last week was major. The election, the Fed, monthly unemployment. Now we're going to hear a lot of Fed talk. We'll see the impact on thoughts on the election, on the market. We got jolts on Tuesday. Lots of Fed heads are speaking. Lots of Fed heads speaking. We got some auctions on Thursday with Powell speaking, and then we got some PPI and sentiment and Baker Hughes on Friday. I'd say that's a medium at best, and if it wasn't for Powell, it'd be even lighter. Powell's not been the market's enemy of late, so I don't expect that to hurt the market. So, earnings. I own some plugs, so hopefully it wasn't a mistake to hold it over the weekend. Workhorse has fallen off recently. Novavax, one of the vaccine plays. Interesting to hear what they say about their progress. Jumaya, I own some of that. I know so does my favorite neighbor, so we're going to have to decide. Or she'll have to decide. I'll have to independently decide whether I keep it or I sell it. It's been on a tear lately, getting back to its all-time highs. Datadog, I have a position in that, but I protected it with puts. Lemonade was on my buy list or interesting list, but I wouldn't buy something right before earnings. That's why it's important to know when earnings are. Fetch broke out last week. It's coming into earnings. So it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So here are my thoughts. The S&P surged this week to bounce back from the last week's 5.5 decline. So one good week, one bad week. As the prospect of a divided Congress outweighed the fact that no presidential winner was declared by week's end. The NASDAQ composite rallied 9%, the Dow rallied 6.9%, and the Russell also 6.9%. To my view, the market mania was fueled by the current scenario that would make it unlikely for lawmakers to pass a massive stimulus bill, increase the capital gains tax rate, or alter the healthcare system. A smaller or even delayed stimulus deal would disproportionately help the mega cap growth stocks and hurt the cyclical stocks due to the potential for a slower economic recovery. There is still significant risk to this scenario as there are two runoffs in Georgia to control the majority. Historically, the Republicans have done very well in Georgia. It's a conservative state and have done well in runoffs. This isn't typical times. As we move on from the election, one cannot ignore the risk beyond who controls the government. COVID is raging. Will Biden have to shut down the economy as is going on in the EU and other parts of the world? Will the economy continue to improve without substantial stimulus? Can a Biden presidency with potentially split Congress bring the fractured country back together again? And what else can the Fed do? Last week was impressive for the bulls, and oversold condition was fueled by the election for substantial gains. As I mentioned from time to time, I hedge around times with increased volatility, but still beat the market returns on the week handily. I'm not ready to take off some of my puts, but I had my own FOMO last week and did buy some of the stocks breaking out. For the year, I am up considerably, up over 175%, and I'm as much in protection mindset, but will continue to play the market we have, not the one I think we should have. You can see the returns on the other major markets. The NASDAQ, which is the highest, is at 32%. How did I get a triple-digit return year to date? Most importantly, I grasped the concept of be your own guru. It is your responsibility to get educated. There are many avenues, both free and with tuition, to help you. I use tools to help me find setups and to scan the market. But when it comes to taking trades and managing my positions, it is about homework, price volume, and money management. I take risks that you may not be willing to take, options and portfolio margin. I work full time and have a family. I try to look at my charts every night or early morning. I have a news feed from briefing.com that goes to my iPhone, but I do not sit by my computer all day. I am a swing to position trader, and I let my chart picking find the setups. I use stops to enter and my money management techniques to size and set my stops to exit. Let's go on to the charts. I like to look at TradeStation, again at the futures, just to get a sense of where we are in the market. Let's start with the E-mini futures. Lots of good stuff on this chart, and then a little bit of caution. First thing I look at is the arrows. John Person, PPS, buy or sell. We're in a buy. We're in a buy on the weekly and a buy on the monthly. Awesome. That's bullish. We're green on the daily, weekly, and monthly. That's the Elder Impulse Indicator. Green, it's okay to go long or hold. You shouldn't short. Red, you should short or hold. You shouldn't go long. Awesome. We do not have any red dots above or green dots below, which is evidence of MACD divergence yet. We'll get those, I think, if we go on to a higher high here, because we don't have much of a MACD move down here. All right. I look down here, my weekly bongo, which is my longer-term trend indicator, just turned green. That's awesome if I'm bullish. I look at my high jump at 62%. It's nowhere problematic. And my Laguerre RSI from Dr. K shows a recent buy signal, which you could see came in after the John Person signal. I look at the minis, and what is my risk here? My risk is that we're at the top of the channel, and at some point we're going to reverse, but I don't see anything here that says it has to be. It could be tomorrow, but it doesn't have to be. This is the Dow futures, and they look almost the same, except their weekly hasn't flipped yet. Here is the Russell futures. So one thing you'll notice, here's that red dots. What does that tell me? It says that got a higher high on price, but less on the MACD, which tells me that perhaps there's less participation, but also adds to the fuel that this probably is going to start to go sideways or come back down. Notice you can go higher with the dots. You can even go higher outside the elder envelope, but eventually it will correct itself. Then our friend the NASDAQ looks great, except it's at the envelope, and it is what it is, 69% or 59% of the high jump. So I think these look fine, and do not say the market cannot go higher. Doesn't guarantee it's going to go higher, but it's it's not at an extreme. The dollar has come down, and sort of the opposite: sell signal, sell signal, sell signal, red, 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 red on the weekly bongo, triggered a Laguerre sell signal. So a weak dollar is actually supportive for stocks. It's also supportive for metals. And is this the time that gold goes off to new highs? Well, gold's got daily, weekly, and monthly buy signals. It's at 29% on the high jump. So we'll see what gold does this week. Now, let's go into the cash markets with HGSI. And let's go into the market analysis views, major markets plus. Let's hit warehouse. And let's look at top-down view. And as you can see here, there's 28 things in my view here. And let's make sure we're ranking by raw combo. So in gold, NASDAQ, NYSE, silver, the IBD breakouts gold and IBD 50 are leading. Growth stocks had a great week. And when the dollar, utilities, commodities, bonds, VIX, oil are at the bottom, that also says stocks had a good week. Now, concerning perhaps might be biotech had a tough week, and Biogen IDEC is going to get hammered, probably where I think it was their Alzheimer's drug. The way that the FDA works is they put together a panel of experts and lay people. The FDA gives them their interpretation of the data, and they ask them for support. It's an advisory committee, and they had a bad advisory committee. I think it was Friday, maybe it was Thursday. So let's move this up here. Let's take a look at some of our favorites. So I'm opening up HGSI, two charts, a daily chart and a weekly chart, and we all have our favorite charts. All right. So here is the S&P 500. This just tells me the high jump is okay. It's not a problem. So just from the top, you can't see anything here. That's the Hindenburg Omen. If I go back a while, notice these red bars firing here. Those were the Hindenburg Omen before the market tanked. The market dropped a little bit here, but really not meaningful. A bunch of Hindenburg Omens, the market dropped. Yeah, meaningful, but not the end of the world. So to me, when I see them, I pay attention to them. The next group down here is the weekly bongo, which just turned green. Then the high jump oscillator. Then I have a series of colors. This one would be for Bible gap ups. Below that would be the squeeze. Then MOBO breakouts. Down here is the John Person buy sell signal, the Person market catcher, pocket pivots. This is Eureka's, which is that follow through day. And then this is volume. But the blue and red are the kahunas, which are momentum moves. For moving averages, I use an 8-day exponential magenta, then a 17, a 50, and 200 simple. These dots are the Wells Wilder RSI. These arrows here are the person signals when they occur. And on some of my charts, you'll actually see the chandelier stop, which you can see right there as well. All right. I look at the S&P and it's above its moving averages. My target's probably to get it back up here. It's got a little bit of ways to go. The good news is you'd expect it to have great support under here with all these moving averages. So I am bullish, at least on this chart. Everything can change on Monday. It doesn't mean we can't go down and test this level. Interestingly, what is that level? That level was the February highs. And it could hopefully be support. It was support on this pullback until it broke. So is it rip-roaring going to the moon? I doubt it, but we have support underneath and some white sky above it. That's the S&P. I look at the Dow Jones Industrials. When I looked at this, I said, I wonder if I could draw a trend line from the top. So I'm a little bit below that trend line. I think that this one has right above its ultimate support. It's above its chandelier stop. I think it runs into resistance soon, and it would have to decisively break above that resistance. So a little bit less excited by the Dow, but it's above its moving averages. But just notice that on the S&P, the magenta was above the green, which is above the blue. This is all reversed, so it's a little bit less bullish appearing. If I go down, I look at the Russell 2000. Magenta breaking above the green, above the blue, above the red. That's a bullish configuration. Had a down day with a red candle high, close to the high jump on Friday. It's moved up a lot from its 50-day moving average, still has support underneath. And if I look at the NASDAQ composite, again, a good configuration of the moving averages. Gapped up on Thursday, didn't go much on Friday. You had a couple pocket pivots, person buy signal. The market is not so extended that it needs to reverse. And, it can go higher, it can go lower. I feel confident or I feel good about the support underneath. It doesn't mean it can't pull back after the week we had last week. If I look at the, here is that breakout opportunities in IBD. I can't buy something like this, but look at this. You had a kahuna sitting on the 50. You had a kahuna with a small breakout. And you had another kahuna. You had 3 kahunas in a row. You didn't have to wait till Monday to buy this thing if you were following it. I can't buy it here. It's too far. Notice that it's pegged. It's at 99.9 on its high jump oscillator. IBD 50 fund. Looks just like the NASDAQ, and comments are the same. A lot of stocks gapped up this week. If I look at the FANGs, new buy signal coming out of mobile breakout from a squeeze, poised to go higher. Yeah, I'd be even happier if the NASDAQ looked like that. Let's look at biotech. So I don't sound like I only can be bullish. Biotech has pulled back, but it's pulled back into a confluence of its moving averages, which might be a natural place to jump. Out of curiosity, BIB may have more to fall. It ran up on news, and this helped biotech this week, but looks like it came down some on Friday. Semiconductors, I like to look at those as well. Very bullish, but look at where they are in their high jump bar, 97.4%, certainly getting extended. Again, can you buy stocks after that? Sure. And in a rip-roaring market, strong stocks can go higher. But at some point, you've got to be aware of the risk. If I look at the dollar, as we said before, the dollar has come down. We look at the VIX. As we said before, the VIX is weak, breaking down. That's good if you're long. And then gold with a weak dollar. Did we see a move? We did. We saw gold break out above its moving averages. It looks great on the weekly, doesn't it? And I did nibble some gold last week at the end, which means it's probably going down based upon my recent luck on the metals. Gold miners didn't do much after the open on Friday. And then silver. Looks like gold miners. The weeklies are strong, though, so we'll see what happens. If I want to look at industry groups, I go to '07, I hit warehouse view, and I see I've got 175. Of those 175, 2-day bullish force 61, 2-day bearish 30. These are total opposites of last week when we had very few bullish ones on last weekend's review. If I look at the longer term up, it was 78, and the longer term down, it is 13. So still a bullish twist to the industry group. So let's look at 2-day force up. Let's make sure we ranked on raw combo, and let's right click on automobiles. So NEO is something I own. We've talked about it here. It's at only 70% on the high jump, which surprises me because it's had a big move. It probably can get up to the top pretty quickly from here. Paused on Friday with a bit of a spinning top. Perhaps that's a sign that this is slowing down, but I'll wait and see confirmation. This has been a huge mover. It's a Chinese electric vehicle. This to me is a learning opportunity. This is a stock that my neighbor had for a long time. And I used to watch the stock in the threesies and foursies, and it never did anything. And you can't get too married to an idea because, look at these days. This is not a growth stock pattern because sometimes things change. And the tenor of this stock definitely changed. And now it's acting like a growth stock leader. It's got, doesn't make money, but that's not a surprise. The volume it trades is just absurd, so it's still probably a heavily manipulated, day traded stock. But trend's been my friend. I'm still long that, but with a short lease. I did last week start to sell calls against my position. GM, someday the big guys catch up on the electric. I'm still not a buyer of these. Tesla, for all the Teslonians, it looks to me like it's getting set up to do something. It's going sideways, sitting on the 50-day moving average. Look at Friday or Thursday, had a Eureka in the market, pocket pivot, a kahuna, a new buy signal. No pocket pivot, I was wrong on that. And a mobile breakout, it just didn't go anywhere. So NEO's extended. Tesla looks like it's getting set to do something. Internet. Wouldn't you love to have been in trade desk? I wasn't. I wish I was. I'll be honest, I thought about it because I saw this. And when I see two kahunas in a row, I get excited. And you know what? You had the opportunity to have bought it on a small move up. But even that small move up was a $15 move. And you can see what happened when earnings came out. The stock went crazy. God bless you if you own it. I can't buy it here. And that's the problem with a lot of the good stocks this week. Uber also can't own it here. Why did it go up? It went up here because of the proposition in California, which would have made its employees, its drivers' employees fail. Again, Zillow Group, a lot like Trade Desk. I had a buy signal right here. Can't buy everything. I had a kahuna, a pocket pivot, a new person buy signal, a mobile breakout sitting on the 50, and we broke through the chandelier stop. There was a strong buy. I should have bought it. I can't buy everything. We gapped up on Thursday, and we went to the moon on Friday. Just hard for me to buy that stock here. Upwork, same story. Spotify, I still know why people have to pay for Spotify. We get so much for free on music, but you got multiple kahunas in a row. You had a new person buy signal, mobile breakout. Is this acting like the others did before it broke out? Your call. I'm just not a big fan of that. Fiverr, pretty strong pullback to the 50 and a rebound. Zillow, breakout. Shopify, like Tesla, looks like it's getting ready to do something. It had a person buy signal come in. It had a kahuna a couple days ago, a mobile breakout on Friday. Sideways move. Earnings are out, so you would need a catalyst. You would think that they would do well like Amazon during the holiday season. If you like Shopify, it's at a good buy point. So watch your stops. Pinterest had a big Bible gap up, hasn't really changed much from where it closed the first day. All right. Lots of beautiful charts, but most of them have gone. Precious metals, the only one above the index is Barrick Gold. And, it had a nice day on Thursday, gave back some on Friday, a good weekly. I still think gold goes higher from here. We go really quickly below the index. Newmont looks like Barrick. Pan American Silver has broken out of this sideways consolidation. Mobile breakout from a squeeze and a kahuna. That looks interesting. First Majestic. Wheaton just broke above its 50. Tech. I've been in this thing before. Tech looks very interesting here. Why? Mobile breakout from a squeeze on Thursday, a good day on Friday, but it hasn't run away from you. Still in a squeeze. Weekly bond goes green, couple kahunas in a row. It's been coming down while the PMC's been getting higher. In 2 quarters, it's got good earnings coming in. I think tech looks interesting here. Didn't put that in my original buy list. Let me add that to it. Goldfields setting up to run. So if gold does well, a lot of these stocks are going to go higher. Renewable energy have been on fire. They should benefit from a Biden presidency, probably benefit from any presidency right now. Plug Power, earnings are out Monday, so I won't comment on it. I have a position. I took it down here. We'll pull back to the 50 and a kahuna. The only problem is it's so close to earnings, so I could get burned on that. Enphase, this is one that I've been in for quite some time. A little bit of a shallow pullback. Looks like it's going again. Don't love the fundamentals. Looks great on a weekly chart. SunPower, similar chart. Solar Edge has been a leader. It's pulled back hard. I'd probably stay away from it until it gets above the 50, although its earnings are out. First Solar earnings are out. I think they had good earnings. I just don't see a buy signal sitting there today. Sunrun was one of the big leaders of the last 6 months. You can see that on the weekly chart. It's in the pretty dense, deep pullback. Had a red candle high on Friday. Right now, in my view, it's failing at the 50. If it can break above the 50 and break above the chandelier stop, especially if I see a kahuna coming in, it did have a new person buy signal. This might be interesting, but it needs to move before it's interesting. E-commerce discretionary. Amazon, this is why my puts kill me. It was as high here as 35. It got as low here as 28.71. In reality, since September, it's gone nowhere, so I've paid rent on my puts to maintain the value. As I said, probably would not have been doing that had I not been building a house. And to me, I could cash out my money to pay for the house, or I could put a put on it so I know the money's not going anywhere. So since I put a put on it and I used the margin to buy other stocks that have gone up, it's turned out to be a good thing. Going up, I just wanted to show you this because I do put out some pretty big numbers. And this is my overall P&L year to date. That's not annualized. And there's 7 digits there. So I just don't want you to think that I'm BSing when I give my numbers. But I put those puts on so I can write a check for my house I'm building. And I can't afford the market risk because these things can drop 2,000 to 1,200. I can't afford that. Alibaba, I love it. I own it already, so I'm preaching my book. It pulled back on the Ant IPO being pulled. But look at this, a PPS buy signal, a kahuna um, coming out of a squeeze. Earnings are out. I like Alibaba. Again, I'm talking my book. Mercado Libre, the South American eBay that's just been a superstar, which I've missed on. Fetch, I mentioned last week it broke out. Here's the day right here. You have a mobile breakout from a squeeze off of the moving averages with a kahuna and a person buy signal, and it's run up. Can I buy that now? Well, no, it's too far extended. It's at 100% on the high-low jump, and its earnings are out on Friday, on the 12th, whichever day it is this week, Thursday. Wayfair, another one that I just was stupid on. Right now, I probably wouldn't be chasing it. I'd like to see it move some, but it did have a pot person move. Here's the Eureka on the markets, a kahuna and a mobile breakout and a squeeze Thursday. It's just right now in congestion going sideways. Decent earnings per share growth. Netflix kind of looks like Wayfair trying to get going. I did buy JD.com on this breakout. Earnings are not for a couple weeks. But do you want to buy something after it's run up from a high here of 83, 3 days later to 93? I think the risk is a lot higher for you today than it was a week ago. I also bought PDD about a week ago. It broke out, and again, it's had a big run in just a couple of days. eBay, I have a position in Etsy. It's not doing much. Yes, I have a lot of positions. Too many positions. So I can't criticize my neighbor too much for having too many positions. But every one of mine has stops put in unless they've had a major move and I'm managing them other ways. And you have to be very careful when you have this many positions. Bear markets have a tendency of helping you get less positions. NVIDIA earnings out the 18th. It broke out on Wednesday and continues to look strong. It's also under accumulation. AMD, or I have a position in NVIDIA. I got rid of my AMD. I probably ought to get back in. It's pulled back. It looks like it's getting ready to run again. Great earnings per share growth. And I kid you not, I bought this computer just to play with an AMD Ryzen. It's a great processor. It's as fast as my i9s, 10th generation i9s, and it's at pennies compared to it in price. Qualcomm broke out on earnings. Still got great earnings per share growth coming in, but it's already had its earnings and broke out. Marvell, it had an 8% move on Friday, and on Thursday it had a 6% move. So it's 13 or 14% off of its moving averages. It's already run too much, although it looks like it wants to go higher. Lots of good charts today, but so many of them are extended. Xilinx, Microchip, Breakout Mania. Micron, less broken out than others. Look at Thursday gave you. Person buy, pocket pivot, kahuna, and mobile breakout from a squeeze. Probably not too late to get into Micron. So the message today is really there's tons of good looking charts, but they're not all at good buy points. Zoom, if you're a believer in this, if you believe that we're going to stop having offices, I'm beginning to believe that, by the way, and live in the Zoom economy, look at the earnings per share growth. Look at the multiple. Look at the demand. Look at the support. How do you buy Zoom? You can buy Zoom at $500 a share. What are the earnings? Earnings are at the end of the month. Or You could look at options. So December option at the money cost you $52 to control a share of Zoom through options day. How much does the market think the options are going to move? It's pricing in over the next month by December 18th, a 110-point move. It's pricing in a 95-point move for options. Buying options is expensive. What you could do says, hey, I'm going to buy a $52 call and I'm going to sell So I'm going to buy a at the money call, and I'm going to sell a $600 call. So let me get these both in here. Hold on a second. I use my phone. I don't use. So I'm going to buy a 500 call. I'm going to sell a 600 call. Okay, I can do that. And so we're right here, okay? As the price goes higher, assuming I held my call to expiration, which is this light blue, as the price goes higher, I make more money. In fact, I will max out, you won't see it here, at $100 per share, which is the delta between the $600 short position and the $500 long position. I am going to pay $33. So as long as Zoom moves more than $33 in my favor between now and the middle of December, I have a opportunity to make up to $100 per share. The most I could lose is the cost of admission. So if I was to buy 10 calls, it would cost me $33,000, and the most I could lose is $33,000. That's may not be good for some people. I don't like it either. Now, I might look at selling a call. Selling a put rather at the same strike price, and then maybe buying something, buying a put there. So now what I've done is I've created a trade where, let's go look at the analyze. So now it's costing me $15 to get in, but I can lose a lot more because I have a short put position if the stock goes against me. So there's many different trades you can take. I get my big returns because I've spent a lot of time, money, and hours learning how to do options. And to me, the way that I can take a trade that's this expensive, a stock, is by doing some type of an option spread. It's hard, even for anybody, to go out and buy 1,000 shares of a $500 stock. Not impossible, but it's hard. So it's important to learn options. The point I was trying to make was you can say, I think it's going to go to 600, and I could buy a 550 call for $32. All right. Here it only has to go to 582 for me to break even, but the most I can lose is $32. You need to learn calls and puts. You need to realize that they're risky, because if it doesn't go to my strike price, I could lose it all. I refer you to the Options Industry Council, where they will be more than happy to send you brochures and books and to teach you about options. But will give you a fair balance as to the risk of option trades. The purpose of this today was to show you that there are cheaper ways to play, but you got to understand the risk. The other thing is I want to emphasize, no one says if you buy a call or sell a call, you have to hold it to expiration. And so I would never hold something till it was maxed down. Once I saw it was going against me, I would take what was left and get out of it. All right. So Zoom looks at a decent buy point. HubSpot, breakout mania. Yep, here is the buy spot. Pocket pivot, Kahuna, new person buy signal, mobile breakout from a squeeze, flip the PSAR. Perfect time to buy, but that was $50 ago. Tough for me to chase into that. Salesforce, it's kind of at an interesting place. Earnings are not to December. This is a stock that historically did not make much money, but it's been building a great company. It's got great earnings per share growth. It held the gap up after the last, that wasn't earnings here, I don't believe. But it held the gap up in August. It looks interesting here. Glue Mobile, this has been a historic tough stock for me to own. It's been all over the place. It's been another one of these cheap stocks that has been a day trading heaven. Is it changing like NEO did? Kahuna, person buy, mobile breakup from a squeeze and a Bible gap up. Buy this one at your own risk. It's a gaming stock, and gaming stocks seem to do well at this time of year. Here's Take Two, a gaming stock that had a Bible gap up. Now, look at this. Did somebody know something? Kahuna, breakout. Pocket pivots, 2 days, a person buy signal in a squeeze. The signals work. They don't tell you how to trade them. They just help drive your attention. Appian, broken out, breakout mania. Adobe, is it getting ready to break out? It might be. Earnings are not to December. So a lot of good-looking stocks. I want to keep going down this list. Has been one of my favorite groups. Everbridge has been in a downtrend, so I probably wouldn't be chasing that one yet. Here's one of the stocks that I own. SE, all-time high. I got it back down here before it broke out, and I haven't sold it. Probably going to sell it soon because it's getting deep with capital gains, and I'm probably going to get to be too much of a position for that account. But this has had a very nice run. Would I buy it here? No. But a couple of days ago, it had a pocket pivot and a mobile breakout from a squeeze and a new person buy signal, but it's jumped already. Digital Termite, breakout mania. One of the challenges here are the stocks that haven't broken out yet. Are you buying laggards? Probably. Doesn't mean laggards can't do well as well. Electrical power equipment. I will take a victory lap, not on General Electric, but how many of you remember when I told you to buy Generac at 100? All right. We're not talking that far ago. We're talking right back here. A couple of kahunas. It gapped up the next day, which could have scared you from taking the buy. It was less than 100. That was the day. That was back in May. And now, 6 months later, the stock has gone from the high 90s to 230. I know some of you bought it because I got some thank yous. Why did I want to buy it back then? Let's see. What do you see here? I see a mobile breakout from a squeeze. I see a new person buy signal, and I see a kahuna. And I'm just above the 50-day moving average. Broken record. That's when I buy stuff. I gave it to you over the weekend. This was Friday's close. It gapped up to Monday, so it became a little bit more expensive of a stock, but it turned out to be a double in 6 months, a little bit more than a double. I trade a pattern. How I take the trade will vary, but that's the pattern that I'm looking for. I use my tools to help me find that pattern. I know this is getting long. Snap, breakout, looks like it's ready to roll again. Um, Facebook, they had to benefit from the education and the election and the advertising spend, and they're going to get an extra bump because we've never seen spending like we're going to see in the Senate race. Um, it's not a bad buy point. Earnings are already out. It makes money. Um, I don't use it, but I own it. Google broke out, and I'm good. Baidu had nice earnings, nice move up there. Yeah, I usually like to look at the top 10 groups. This is the 10th one. I'm going to look at a couple other things before I say goodbye. Yeti Holdings, it broke out. Would I be buying it up here? Probably not. That doesn't mean it doesn't go higher. It's just not my style. Vista, I can't buy this because my wife would kill me. They make ammunition. Um, Nothing wrong with that. I respect people's rights. But I don't have to own the stock that makes them. Kahuna, Pocket Pivot, new person buy signal, mobile breakout from the squeeze, and a green candle low. It doesn't get much better than that, folks. And by the way, I wasn't trying to be political. As I said, I respect your right to choose whatever you want. I just made a commitment to my wife because she's much more committed than I am to that issue. And so, since it's her money too, I did that commitment. TMO, man, I went to visit them in the early days of the COVID. I didn't have any type of a non-solicit. They didn't give me any great information where I would have wanted to buy the stock. But my God, what a run from 280 when I was there to almost a double. Um, it's been a nice, steady uptrend. It's not been that exciting. It's now getting extended at 100%. I wouldn't be chasing here. I'm just impressed. They make a lot of laboratory equipment, and I'm sure they're benefit from testing. Mettler Toledo, again, laboratory equipment. Big move up on earnings, I believe. I can't chase it there. Danaher, ditto. Abbott Labs, breaking out, pays a small dividend, used to be a bigger dividend. IDEX, veterinary medicine, and Quidel. It's funny. Right about here, I said it's both a bear, a short, and a long, and it was a short for about 5-7 days. I'm long this. I've been really long since the bottom. I just bought put protection when I made that comment. Um, there's my pattern. It's way above the 50. That's the negative. Look at the earnings per share growth. Look at the multiple. Tell me how, if that multiple stays the same, this price doesn't double or triple from here. All right. I've looked at a lot of stocks. Let me share with you my buy watch list. Now, here's the problem. The problem is the markets have just had a big run. There's a lot of noise out there that could cause the market to pause. And a lot of the stocks that we've talked about have already broken out and have run. These were some of the stocks that I looked at this weekend that I am going to be watching as this week goes on. There's no guarantees in this business. But these were some of my favorite charts, many of which we've already looked at. On the application software, I commented that this was an exciting industry group. We looked at Glue Mobile, Digital Turbine. Ceridian has not run yet. Salesforce, Zoom. On the automobiles, I didn't mention Candy. It would be more of a speculative Chinese vehicle play, but they actually have vehicles on the road. Is this like a Junior Neo? Maybe something to take a look at. Biotech, Cardiff, I think, is more of a testing company. I can't tell. Not Cardiff. Yeah, I think Cardiff. I have a nice position in Cardiff, and it continues to do well. Certainly has not gone very far. I don't know Elector, and the only reason why it showed up was this move, a person buy signal coming in. I probably shouldn't have this on my list. FedEx, I'll just go back one here. You know, beautiful uptrend, pull back to support, and on Thursday it had my, with the Eureka, person buy, Kahuna, mobile breakout, good earnings per share growth, earnings mid-December, should be a good time of year for them. Ollie's, it's not at a great buy point, but if you're a believer in what they have, put it on a watch list and look for that Kahuna to come in because it just broke above the 50. May turn out to be an excellent buy point. R1RCM is a competitor of my business in the physician billing and healthcare services, financial services, big uptrend, great earnings per share growth, huge multiple, under demand. Ultra Clean Holdings, it's already had its day, but just that thing, when you see multiple kahunas in a row, it tells me to pay attention. Virtue Finance, it's ugly pattern. But here we got a mobile breakout from a squeeze, person buy, pocket pivot, kahuna, took out its chandelier stop, and it's about to take out the 50. And look at the earnings per share growth. And look at this earnings yield. And then look at the PE. $2 plus $1.72, that's $3.77. Add 63 is $4.40. Add 58 cents, $4.98 or $5 a share. If you have $5 of earnings and you have a multiple of 5.5, you're at $27.50. So that's not a huge gain. That's about a $4 gain on a $23 stock, so 15-18%. But why would your multiple stay at 5.5? This is when I might, at the risk of causing computer problems, go into MarketSmith. No, I already own that, so let's just sign in. One of the things I like about MarketSmith, this is Virtu, right? VIRT. Huge earnings per share growth here. This is the problem. The earnings are supposed to slow down next year. I still think this thing goes higher based upon that if they hit their numbers. So on that note, I think I'm going to say goodbye. I'm tired. You're tired. There is a educational program that I'm going to probably do again this year. I've gone before. It's being held online this year, which makes it, interestingly, less expensive. And he has his annual program, Mark Minervini, his workshop. I think you can still register. It's next weekend. It's online. Allegedly, they're going to be archiving the videos, and you can watch him, Mark Minervini, David Ryan. I learned a lot from Mark. I've read his books. I went last year. As I said, I'm going to probably register and do it this year, although I'll probably do it after hours and not during the program. On that note, I'm going to say goodbye. Trade safe. Be safe, and we'll talk to you next week. Goodbye, everybody, and thank you.